Good afternoon, notaries. Hope everyone is having a good afternoon. So we'll get started right away because I know there's a lot of content in this session and we've had some really good feedback. And specifically, thank you to Christy Martin from our Continuing Education Liaison Committee who brought this topic to us. So this is one CE credit, and if you can see us on screen, then I will record it directly to Marnie and Shanae at the Society, and you will get that CE credit, as I know the reporting year is coming up at the end of June, but also to put a plug in for our conference that's coming up in April in Vancouver, where you can get your 10 CE credits. So please get signed up for that and book your hotel as well. There's lots of fun stuff planned. And Q&A, we will address those at the end. So if you want to pop the questions in there at any time, but we will wait until the end as we have 3 different speakers. So we do have Ruben from LTSA starting us off with LOTA filing, and then we will move to Sonia, who is a partner of an accounting firm, who will discuss T3 filing and UHT, and they'll both look at specific scenarios. And Hilda will wrap it up at the end for us as to how this affects you as notaries, and then we will look at any questions. So I think I've covered all the housekeeping notes and I don't need to talk anymore. So let's pass it over to you, Ruben, to get us started.
Thanks, Trista. Thanks, Chad. Thank you to BC Notaries Association for inviting us here today. And so thank you to everyone who's joining us. And just as an FYI, the material that I'm going to share with you today is going to be available, and BC Notaries will circulate that to you after for reference. So the purpose of today's kind of focus of the discussions really is around relevant trust filings. I understand that there's been, you've had a lot of questions that you've advanced to the association. And so my objective here is to hopefully try and answer some questions and provide further clarity in respect of trust filings. Just some quick preliminaries. As always, we're here. We're not the enforcement division of the province of BC. So my role as administrator is to ensure that the filings are in compliance with the legislation and corresponding regulation. As always, I strongly encourage you to always say the source of truth is always the Landowner Transparency Act and its regulations. So that is sort of your guiding principle in terms of how you interpret. And everything that's being provided today and shared is based on information, legislation, interpretation as of today. And that can change, right? And as you know, LOTA has changed since it was originally launched. There could be changes to the interpretation, and as always, also look at our website, landtransparency.ca, and the province's website, which I'll have a link shortly in subsequent slides. So let's just get into the filings. So first of all, LOTA covers 2 trusts. So pretty much all express trusts, so being intentional trusts, are relevant trusts. Secondly, bare trusts, including nominees that are registered on title holding interest in land as trustee, are relevant trusts. So when you have those 2 situations, the first step here is to ask what type of a trust situation we have here. So I'm going to take you through a step-by-step process as to how you would actually peel the onion to then determine whether a filing is required. So 2 types of trusts, predominantly the ones that you're dealing with in most cases: express trusts and bare trusts. All of them are captured in LOTA and generally will require filings. There are exceptions. So you'll see on the right side here, LOTA does contain a provision under Schedule 2 where there's a number of trusts that are excluded. And by that, it means that they're excluded relevant trusts, and therefore, if in those unique circumstances, they will not require a transparency report. So a transparency report in these cases is not required only if the registered owner itself is an interest that owns the interest in land, is a trustee that fits one of these exclusions. So you have to look at the registered owner and do they fit any one of these exclusions? If they do, then right away, the easy answer for you is you don't require a transparency report. In most cases, The types of transactions that you're probably dealing with on a more common basis are probably the first four: charitable trust, a testamentary trust, alter ego trust, or joint spousal trust. And then in some cases, maybe the PGT, the public guardian trust. And it's the first five bullets, is the administrator of an estate. So if you're registering, or an owner is currently registered as any one of these type of trustees, then you don't require anything further. But just remember, we're talking about transparency reports. When you do a transfer, so a new application to register, you would still, in most cases, require a transparency declaration, right? So here, the context of the conversation evolves around a transparency report. Step two. So we've covered off step one in that, okay, you're going to determine if an exclusion exists. If it does, you don't have to do a transparency report, you're done. Now, if an exclusion doesn't exist, then you might have to do a transparency report. So there's further investigations that you're going to have to do. So first of all, step two is you have to understand the specifics of the trust agreement between the parties. And each agreement, each scenario could be very unique in that sense. So the only way that you can understand that is to, well, ask the question of your client and obtain the trust agreements and any other documentation to really understand what you're dealing with. So the most common scenarios that I understand you're dealing with and for which you have questions around are around what we call partial interest in land. So when, let's say, an individual is a registered owner of a small interest, let's say 1%, and in that situation where the parent is actually assisting with the down payment of a property. So the parent's on title as 1% interest, and the child is 99% interest. So this comes directly from the interpretation as set out by the LODA enforcement team of the province of BC. So I've provided a link to this document here so that you can actually look for the specific guidance here. So as you're well aware, in these situations, it's possible that the parent could be considered a trustee of a relevant trust and therefore be required to file a transparency report. Again, it really depends on the specifics of the agreement. So this step here is really about understanding what the entire arrangements are as between the parties that you're dealing with. To determine if your client, so in this case I'm saying you, but if your client's a reporting body, you must first consider if your client in fact has a beneficial interest in the land. So really, are they entitled to receive any portion of the proceeds from the sale of the property, or are they entitled to any other enforceable equitable rights in court? So that's a key piece. So that will establish whether there's a beneficial interest there. The other thing to consider as well is are they holding the interest for the benefit of the other registered owner or transferees? So depending on if it's an existingly owned property or if you're actually doing a transfer. So if they're holding it for, let's say, their child and are only listed on title for financing or other purposes. Now, so it's really about defining if there is any form of beneficial interest being held in trust. If this is the case, then there's a high probability here that they're holding that interest as trustee for the benefit of another transferee or an owner of or a child in that case, in this kind of a scenario. So then the final step is then making the decision or a determination as to whether or not you need to file. One of the most significant changes late last year, and I think this is good news for most of you dealing with these type of transactions. So effective November 20th, 2023, the province passed new legislative amendment through regulation And this is a new section 13 sub 6 of LODA, and I've provided the link there for you, which will take you right to that legislation. So where it says that a trustee of a relevant trust is not required to file a transparency report if the interest in land is or will be registered in the name of all the beneficial owners in respect of the interest in land. So really what this is getting at is, if the title itself exposes all of the legal owners as well as the beneficial owners, then you're not required to file a transparency report. So consider that previous circumstances in the previous slide that I talked about, where you have a parent that owns 99% interest and is registered on title, and where the child is the parent's not 1% and the child is 99%. So in that circumstance, if both of them are beneficial owners and are both registered on title, then the parent is not required to file a transparency report as a trustee for relevant trust. Prior to this new section 13.6, you've all had to file a transparency report because this provision did not exist. So really what it's getting at is whether the title itself is going to expose all of the legal and beneficial owners. So then the other point I provide here is, if there are additional beneficial owners who are not registered on title, then you've got to ask the question, who are they? And is there a beneficial interest there? And then, yes, the trustee must file a transparency report. So really, it's about, so just to encapsulate, you start with establishing whether a trust exists, or a bare trust or express trust. Then you figure out, is the registered owner on title excluded under Schedule 2 by any chance? If they are, you're done. If they're not, then you go to the next step to determine, okay, let's get the facts around the trust agreement as between the parties. Is there a beneficial interest? Does any beneficiary benefit from proceeds of the sale or any other benefits? If there is, then you go to the last step to determine, okay, now who's going to be on title? If everyone's going to be on title, the legal owner as well as the beneficial owners, then you don't need a transparency report. So if not, then you're going to have to look at and see, well, which one's the trustee, and the trustee is going to have to file a report. So I believe that this new section 13.6 is probably going to make a lot of your filings much easier and simpler, because when you're dealing with these type of a situation, in most cases, the partial interest holder as well as the majority interest holder are on title, and so in most cases the beneficiaries are already displayed on title. So that actually concludes, it's a brief presentation, and so I'm going to pass it over to Sonia to take on the next part of the presentation.
I have to figure out how to unmute myself. Sorry, you think you would know by now, right? So now we're onto the underused housing tax, our favorite topics of the day, and the expanded trust reporting. So like Ruben's disclaimer, these are just the interpretations that I've learned over the course of taking all these courses over 2 years on all this reporting. So if you're you look at underused housing tax and the expanded trust reporting requirements, you throw out what Ruben just told you and you have to relearn it, because it's a little bit different. So even if they have a transparency reporting requirement, they may also have UHT and a trust reporting requirement, or they may not. We don't know that. So going into underused housing tax, this is for the 2022 taxation year. This was introduced as part of the 2021 federal budget. It is a 1% annual tax on the value of the residential real estate owned by any non-resident or non-Canadian that is considered vacant or underused. So the rules were enacted on June 9th, 2022 for the reporting period on or after December 30th. Sorry, that's a typo there. 2022, so therefore December 31st, 2022 year ends. The reporting deadline of April 30th, 2023 was pushed back on October 31st, was pushed back to October 31st, 2023. And on October 31st at 1:30 in the afternoon Pacific Standard Time, so you can imagine 4:30 Eastern Standard Time, the federal government announced another pushback to April 30th, 2024. So all of us accountants were like, is this a trick or a treat? Because either way, it's ugly. So for the 2022 taxation year, you must fill out the form, your client, not you, a UHT 2900, right? And it's only to be filled out by affected owners of each property. So if you're a Canadian citizen or a permanent resident, you can own as many properties as you want in Canada. It just depends on how you hold those properties. If you hold them with somebody else's joint of right of survivorship, and the other party is Canadian citizen, you're okay. You don't have, you're an excluded owner, you're not an affected owner. So where this came into play was when you have corporations that hold property, Canadian property, mostly residential property, right? And if you have partnerships, joint ventures, as Ruben described, bare trust arrangements where parent is on title to that 1% interest and beneficial ownership is with maybe John and Jill. So you have to look into, so your client, you're advising your client, hey, you know what, yes, you have this LOTA filing, but you may also have to file the underutilized housing tax form. Affected owners of each, and you have to file one form per property. So I have a client who owns 220 strata units in one property. They have to file 220 UHT forms. Okay. If you don't file the form and it's determined that you need to file, the penalty is $1,000 per return for individuals and $2,000 for non-individuals per return per year that you haven't filed. This used to be $5,000 for individuals and $10,000. So in the fall economic update, there were some changes that were made. I'm not going to go through and tell you who all the excluded owners are and who the affected owners are. I will make my presentation available. There are links, and the CRA has come up with really nice if-then statements. So you just click away and it'll tell you exactly if you have to file, if you don't have to file. My stance is, if you don't know, or if the client doesn't know if they have to file. Just file. It's a nil return. It'll probably not owe any taxes. Chances are you're an affected owner with exclusions. Okay. So then in the fall economic update that was in November, they changed the rules. However, these rules are only for 2023 and forward. Okay, so they didn't go back to 2022. They said no, 2023 and subsequent taxation years. The other issue is this tax return is due also April 30th, 2024. So, but the proposed changes have not received royal assent. They have not been enacted by the federal government, but CRA has issued some stance on this. So gonna hang my hat on that to say, hey, CRA, you came out with some changes. The changes are now that if you own the property in a corporation, a trust, partnership, joint venture, any of those, you're now exempt from filing, as long as you're a Canadian citizen or permanent resident. So that takes care of about 99% of our filings. Which were all nil returns. In my office, most of them were nil returns. So to me, this is good news. And finally, the government is saying, hey, we created a lot of red tape, a lot of paperwork for everybody to file. But they haven't excluded 2022 yet. The penalties are horrendous. So my job is to tell my clients, if we come across this scenario, you have this obligation to file. If they choose not to, they choose not to. My job is to tell them you possibly have this requirement. The same thing happens with you. You're just advising your client you could possibly have a UHT filing. You are not telling them you have to file and bring me the UHT form and I will make sure that, you know, it's done. They can file these UHT forms online as representatives. Last time I checked, we were not able to file them online. We had to paper file all the UHTs that we filed. So then now, because the rules have changed, a lot of accountants, I feel, have relaxed on the UHT side of things, just because half of our clients don't need to file anymore because they're excluded owners and they meet the new exemptions. But for 2022 taxation year, they still have to file. Now, unfortunately, they also may have to file under the expanded trust reporting rules. So these are the new T3 trust reporting was always there, but in the 2018 federal budget, it was enacted that for years ended on or after December 30th, 2023, meaning December 31st, 2023, all returns have to be filed for any trusts. Okay. So this, under the before they had a administration rule, if there was no activity in the trust, there's nothing going in and out, you didn't have to file. Now they want everybody to file, and this is just to do with transparency. Under the new rules, this also includes bare trusts, right? So a bare trust, like Ruben said, could be one where you don't have anything in writing. Mom and dad are added on as a 1% owner of the property, but they have no beneficial interest in the property. So you advise the client, you possibly have a T3 filing. It will be a nil T3 return, but they still have to file. So because beneficial ownership is with Jack and Jill, their son or daughter, it's not in writing, but they do need to have a trust agreement in place. So you will be probably bombarded by accountants saying, hey, client, I need trust agreements to show that you have this bare trust arrangement in place. So having said that, so when you have that 1% person on title, mom and dad are on 1%, they don't have beneficial interest. They never filed these T3 returns because they didn't understand and they couldn't figure it out. And it happened 10 years ago when, they bought the property. Now they sell the property, right? So now you go back and you go, hey, who's getting the proceeds from this? Is the 1% interest going to mom and dad? No, it's all staying with the son or daughter. Revenue Canada is going to look at that and say, wait a minute, mom and dad, you're on for 1%. You have a capital gain of 1% of those proceeds. And mom and dad are going to argue, no, it was beneficial interest. It should be over with son or daughter. Revenue Canada will say, okay, produce the T3 Bare Trust reports, right? The T3 returns. Oh, I didn't file any. Well, then your argument is now looked upon as even weaker, right? So for the 2023 taxation year, they have waived the $2,500 maximum penalty because penalties are $25 a day for a maximum penalty of $100, right? Up to $2,500. It's for the 2023 taxation year, it's been waived. Any year after that, it's not waived. The other concern, me as a practitioner, that I have is that they can also assess an additional penalty of a failure to, like, if you knew you had to file or you were like, oh yeah, maybe, I don't know, that's gross negligence. And if you have a and not you, your client could have a gross negligence penalty of 5% of the value of the property held by the trust. Okay, and that's each year, right? So you're looking each year that they haven't filed, they have this gross negligence penalty, right? CRA has come up with great interpretations of what a bare trust is, what you kind of have to go through for those bare trusts. There's the new Schedule 15 that must be attached to the bare trust or any trust reporting actually. So in Schedule 15, you have to name who the settlor is, who the beneficiaries are, who the trustee is. If they have, an alter ego trust, they have to file a separate trust return. So, mom and dad have an alter ego trust. Or a joint spousal trust where they've moved property into this trust, they will have to file a separate trust return now for this, for whatever property they're holding. For example, their principal residence that they never, they don't want to pay the property transfer tax. So we just, they're holding it in trust for the trust, right? So they will have to file these T3s. The one point that I did want to point out is the regulated professionals. Okay, so as BCNAs, you are regulated professionals. You do hold trust funds for your clients that may, if they're in a pooled trust fund, you're okay. You don't have to file under the expanded T3 reporting requirements. But if you had to go to the bank, you had to open a separate trust account for these individuals, you have to file a T3 return. That includes accountants, real estate agents, any notaries, lawyers, anybody who's holding funds in trust that is not in a pooled account has to file these separate T3s. Doesn't mean that the income is going to be taxed by you. You have to, it flows out to their to the beneficiaries. That part is they're in and out returns, but you have to file these bare trust these T3 returns all under money laundering. This is all under the money laundering requirements that the CRA and the federal government is trying to withhold. The other thing is it your responsibility to collect all the information for Schedule 15? No. Is it your responsibility to advise the client that you possibly have a T3 return? Yes. But is it your responsibility to file the T3 return for them? No. To me, that should be a CPA who does that return for them. They can do it themselves 100%. But I do recommend that maybe that first year they have a CPA do it, and every year after that they can probably do it themselves. My presentation today was supposed to be a bit of a scare tactic, just because I feel that nobody's scaring anybody out there right now. I think the Globe and Mail had a very good presentation the other day on or article that came out on all these reporting requirements and how complex it's actually becoming to be a Canadian taxpayer. But that's it. I don't know how many people read the Globe and Mail or how many people get that article. I just know I saw it on LinkedIn, but the rules are getting a lot more complicated. And that, concludes my presentation. I'll stop sharing the screen.
All right, thank you so very much. So I think, the message coming through, I think this was a great presentation, like for all of us members of the notaries. And to your point, Sonia, it's everything is becoming more complex, and the consequences attached to everything are becoming more significant, right? And so it's not just about what we do in the moment of the transaction when we are sitting with the client, but it's also very much as to what are the potential consequences that later at a future moment in time will be triggered, whether it's at time of sale, whether it's at time of meeting with a CPA and they make them aware of, oh, but you didn't do this and you didn't do that and nobody told you, or somebody's passing or somebody becoming incapacitated. All these moments in life will provide people now with a rear view mirror where they go, had I known, should have known. And so therefore, we go back to the same old, that the notary's notes will become more important than ever before, because I think a notary now will need to have very detailed notes from the moment that you had your consultation, your meeting with your client, as to who is who here, right? Why are you doing what you are doing? What is the intent between the parties? And the notes have to be such that they are clear not just to you, the reader, but the notary, but that they are very clear to any outside party, whether that is CRA asking for the file, whether that is a lawyer asking for the file because of an estate proceeding or a divorce proceeding, is going to become very important. So I think our mindset has to be that this data collection we're doing is not just because of loader filing, but that it's also, to have clear notes that tell the story and what the client's understanding was at that moment in time, not later when they have different information or knowledge, but also that the parties are encouraged to make sure that they have the necessary documentation between each other in place, for which we as a notary don't necessarily can help them with it, but just make them aware you may want to put other legal documents in place to clarify the nature of the relationship and the transaction, right? So to that note, I think many of us may want to maybe look at updating our checklists. We may want to look at changing our retainer letters or engagement letters, to reflect the scope of our service and what we are not doing, and to adjust that people should seek the appropriate legal advice, that we are not providing tax advice. As to the tax component, that we are not telling them, to your point, Sonia, what we are doing and not doing, right? So I think it's just be very aware, and we are at the center of the transaction, and so our file should reflect what the transaction entailed in that very moment. I think it's what I wanted to add to this conversation.
Thank you, Hilda. Thank you, Sonia. Thank you, Ruben. Appreciate all that information in a short time. So we do have a flurry of questions coming through, and I know you've probably had a chance to look at them. So we'll go back to the start, as I know some came in for you, Ruben, and it looks like maybe you've answered some of them on here. So Ruben, does it matter if the trust agreement between parent and child is not in writing?
Yeah, it's an excellent question. It doesn't matter if it's not in writing. It could be some other form of an agreement or a verbal agreement. And if that agreement constitutes an express trust or some kind of a trust, then there's a high probability that it's subject to a LOTA filing. So, yeah.
Okay.
Can I add to that a little bit too? So again, yes, for expanded beer trust reporting requirements, or sorry, under the expanded T3 reporting requirements, you do not have to have an agreement in writing, but they are requiring some sort of an agreement, right? So under LOTA, they probably didn't have an agreement in writing. It was just verbal, but now they are requiring something. So as long as it says something that says we're holding this property as, trustees for this person as beneficial owners, right? But we are telling clients to get a proper agreement put in place.
Okay, perfect. Thank you. So next one here, if the parents are on title, but only on title due to financing and would get nothing on the sale and get no direct personal benefit from being on title, do we file a report?
Okay. So what I'm understanding from this question is that the parents would have absolutely no beneficial interest or equitable rights upon disposition of the asset. So if you've made that determination, then there is no beneficial interest situation. And so, no, you wouldn't be required to file a transparency report. Hence, my reaffirmation during my presentation about really understanding the agreement and the rights between the parties.
But you would have to file the 2022 UHT and December 31st, 2023, and subsequent years T3 Bear Trust returns.
Okay, perfect. Thank you.
Right, so like it's none of this is cut and dry, black and white, just because the exclusions and everything just make it messy. Right, where you might fall into one category, you'll fall into another, you might fall into another category. The only thing I do want to point out is that as notaries, you're required under you file for LODA, you figure all that stuff out. You tell your client, hey, you might have additional filings required, right? You're not required to say, yes, you have to file UHT. Yes, you have to file T3 and we're going to figure it out for you. No, right? You say, yes, you possibly have these other filing requirements and go seek professional help.
Perfect. Thank you. Okay, would an example of a beneficial owner be a spouse who is not on title to the property, but the couple has expressed it is a mutual marital home?
That's correct. Yeah. So the spouse, as I understand, based on how it's been described, the spouse here who's not on title would have a beneficial interest in the home. So yes, so that in that case, a LODA filing would be required.
And a 2022 UHT filing and a T3 filing as well.
Okay.
Yeah.
Lots of filing. Okay.
It's, you know what, it makes it harder because, you did LODA, but you didn't do UHT or T3 because you're, hey, it's my matrimonial home. Who cares, right? We both own it, but, oh yeah, and for whatever financing reasons, I couldn't put, my partner on title. But, or for whatever reason, you couldn't put partner on title, or you owned it before, and now you guys want to split it 50-50, whatever it is. But it's when you go to sell it, and now Revenue Canada will go back and look, okay, how did you do LODA? Because LODA is available to everybody, right? How did you file UHT? Did you do T3s? Oh, you're claiming the principal residence on this, but you're not on title. What the hell?
But again, the messaging is that the notary's client or just to speak to a CPA. It's not up to the,
Yeah.
Okay, perfect. Okay, if I'm understanding you correctly, if parents are going on title 1% and the beneficial interest belongs to a child that is also going on title as 99, then a report would no longer be required to file since the amendment of November 20th, 2023.
That's correct.
Okay, perfect.
They have the other trust reporting.
Okay. Okay, if a parent gives a gift of survivorship to a child by a joint tenancy, then no report, as both are legal and eventual beneficial. Is that correct?
That's correct. So the reason for that is going to reference section 2 sub A of LODA, where a beneficial owner does not include a type of interest that is contingent on the death of another individual. So they've intentionally excluded that in the legislation. So yes, you're correct in that you don't require a transparency report now. Nothing's changed there.
Okay, anything to add, Sonia?
They still have to.
Same reports, filing. Okay. And Sonia, I think you addressed this one specifically, but are notary public pooled trusted accounts exempted from filing T3 return as a regulated professional?
Pooled, yes.
Pooled
The
only.
pooled ones are exempt for any regulated professional. It's where you have to open separate trust accounts, right? At the bank, you have to go. Usually I see them mostly in estate files, right? Where you have to open separate trust accounts. I'm not familiar with mortgages and all that other stuff, but I do know that for some for whatever reason, however long this process could be, you might have to open a separate trust account. For that reason, you have to file a T3 return for each separate trust account.
Okay, perfect. So there's quite a few, obviously the 99-1 is a common scenario. So for the 99-1 child parent situation, as no report required, if parent 1% is not beneficial, does the LOTA declaration still have to say that the 1% owner is a reporting body?
Okay, so because the question mentions LOTA declaration, I'm going to take it to be a transparency declaration. So in that case, you're preparing a transparency declaration as part of a transfer, so a new application to register an interest in land, assuming there's a purchase of a property here. So my advice is, before you prepare any LOTA, is to go through that three-step process to determine, whether a trust exists, are they excluded by Schedule 2? Then, if the trust exists, if there's a trustee situation, is there a beneficial interest there? And then does the new section 13.6 apply because they're all entitled, etc. So when it doesn't preclude the fact that in a new application to register an interest in land, you still have to file that simple transparency declaration. And you're correct. In that declaration, it does ask, is the transferee or are the transferees reporting body. So because you've gone through that process of explaining that, of analyzing it and concluding it, no. So in that situation, no, there's no reporting body because you're not obligated to file a transparency report. So as soon as you say you're a reporting body, it's automatic that you have to file a transparency report. So do the analysis, reach your conclusion, and then start preparing the transparency deck. And then in this case, you're going to say, no, the transferee is not a reporting body, and you're done. That's it. You've got a transparency declaration together with the land title application to register the Form A transfer.
Okay, great. Thank you. The next one, if a parent owns 1% in trust and there is no bear trust, is it okay to do a bear trust now, but identify the details for the trust starting at an earlier date?
So I'm not sure if this is a LOTA question. Hilde, perhaps this is a question for you.
I wanted to just insert one thing there. If you're going back and starting that trust agreement, do not date it for the start of like 2023. Date it for when the property happened. Right? When that transaction happened, because just because the T3 reporting requirement is now, doesn't mean that that's when this whole arrangement started.
And to that note, I think if a notary was to consider to do that document to sort of correct the fact that nothing was put in writing at the moment, I think it would be best practice to only do that if you were party and involved at the time of purchase or of the transfer of that. In other words, you have personal and professional direct knowledge of what happened at the time.
Okay, thank you. How do we deal with all bear trusts that we set up 15 years ago? Who is responsible for advising all those clients to file a T3? Tanya?
Taxpayer's responsibility. It is not the notary. I think we said this in a comment before. You don't need to go fishing in your own client pool, right? You're fishing in your own client pool to make sure the LOTA filings are done, but you're not fishing in your client pool to tell them, hey, you have a bear trust requirement. I mean, you can advise them, right? But the buck doesn't stop with you. It's the taxpayer's responsibility. You can
If I could add to that as well. Sorry, Sonia.
Go ahead. No, go ahead. Go ahead.
If I could also add to that, in respect of LOTA filings, the statute is very clear that all of the reporting obligations is on either existing registered owners, reporting bodies. There is no obligation anywhere in the statute that says legal professionals or notaries or lawyers. So having said that, I also acknowledge and appreciate the fact that you have some obligations towards your clients, so that's entirely at your discretion. But the statute is very clear it's on registered owners, it's on reporting bodies to do the filings.
And if that client is no longer, you dealt with them 15 years ago and you haven't dealt with them again, you don't have that obligation, in my mind. Because even with CRA, it's what you hold records for 7 years, right? But yeah, I'm not fishing in my client pool, that's for sure.
Okay, and then to clarify, the filing of the T3 is effective as of 2023 reporting year? Is that?
For the 2023 taxation year. So there are some exemptions in determining, like, if the trust has only been in existence for less than 3 months, you don't have to file for 2023. And or other exemptions. They're there. They're very, CRA's made it very easy to figure out what the exemptions are. But it's, like I said, go to the professional, they can tell you, or just, I have links in my presentation. Click on the link. They're really easy to go through. But yeah, it's for the 2023 and subsequent taxation years.
Okay, perfect. Now, do executors need to file a T3 for each estate they are administering?
They're like, again, executors are exempt. I think what we're still waiting for, and I know STEP Canada has also kind of posed this question to Revenue Canada, is that 3-year, when it's a GRE, right, a graduated rate estate, yes, you don't have to file because you're an estate, you're holding it as an executor, but once you lose that status, do you have to file as an executor? So that question is still out there. So some estates are still going on, right? They're over 20 years, they could be 20 years old. My answer would be yes, file. If you don't know, file. What's the harm, right? You're not gonna have that penalty. The Revenue Canada can come back and say, oh, no, you weren't required. Now you have something in writing from Revenue Canada that says you weren't required.
Okay. So for separate interest-bearing trust accounts in 2023, please clarify who must file the T3. If the notary must file the T3 as a trustee, please advise steps to be taken.
Yeah, so yes, the notary must file on the T3. The interest that's earned on that is usually reported by the trustees, right? And when you get that T5 from the bank that says, here's the T5 for that interest bearing account, normally I've seen that it's forwarded to the beneficiaries to say, hey, beneficiary, you need to report this income, right? Now you have an official T3 that you have to issue to them, a T3 slip.
Okay, perfect.
But their professional advisor should also tell them that as well.
Okay, great. It was mentioned that the filing obligation changes were not yet in effect. When will that be official?
Your guess is as good as mine for the 2023 taxation year for the exclusions. CRA has issued an interpretation. I believe they've posted it. And when I looked yesterday, it was there. It just says it's proposed. These are the proposed changes. I don't know when it's coming. We're like, as every accountant out there, we're all holding I don't want to hold my breath too long. But April 30th is coming, right? Please, I went to my MLA, I went to my MP. Don't hold back on when this is going to happen, right? But you got to wait for royal assent or something from the federal government that says, yes, this is going to be enacted.
Okay, perfect. I think this next one might be for Hilda, but correct me if I'm wrong. Can notaries do bear trust agreements for the clients?
Notaries can do bare trust agreements provided that they are exactly as the word says, a bare trust. So the bare minimum, basically explaining the description between the registered ownership and beneficial ownership, only that. Right? Yeah. Anything else, it's not a notary's mandate to assist with that. And the client needs a lawyer to assist.
Okay, perfect. Next question here. Notaries are not authorized to prepare a will in BC if the will is to contain trust, but is it okay to create a trust by conveyancing?
I guess that sort of goes to the point that was just brought up. We are not the ones creating the trust as such. Like if people go on title with for different reasons. It's either a bare trust or we're talking about beneficial versus registered ownership. We would not be creating a trust agreement or any like spousal trust, alter ego trusts. We're not setting up trusts. No.
Okay, perfect. Sorry, I'm just doing a quick scan. I've got some big scenario questions here. And I'm pretty sure this one's been answered, but I'll just put it out there. If the 1% non-beneficial parent on title is not a relevant body, do we have to disclose it on the transparency declaration?
Okay, so and I think maybe I missed answering that particular specific there earlier. So I think the question here is if that individual is not a reporting body, do you actually cite it in the transparency declaration? So please don't include anything other than the name of the transferees in the transparency declaration. So don't even go as far as to describe their, interest 1% or whatever it is. The TD is designed that way. It is just declare the name of the transferees and declare whether or not they're reporting body, and that's it. You don't even have to cite what their interest is whatsoever.
Okay, thanks, Ruben. Sonia, confirming that clients who have added an adult child to a bank account to facilitate estate planning, but adult child does not have beneficial ownership of that account based on a trust agreement, they would also need to file a T3 for that bank account question. And is the filing done by both the parent and the adult child in that case?
So I'm gonna say it depends.
Okay.
Common accountant answer to everything. So if the bank account, in addition to you got to make sure you ask what other properties the child has been added to, is less than $50,000 at any point in the year. As soon as that bank account hit $50,000, the trustee, being the child, has a reporting requirement. Okay. So it's anytime it hits $50,000. After that, you have to file every year, right? So now you have to monitor mom and dad's bank account. So, mom and dad decided to sell a piece of stock that child was not on title to that property, put it in their bank account, and then gift the money to the kids, right? That $50,000 that went into the bank account, that brought the bank account to 50,000 plus. Now you have to require, now Johnny's required to file a trust return. There's naming conventions as well with Revenue Canada, but yes, it depends on what's in the trust, in what they're holding in title for.
Okay.
So in BC, huge estate planning thing that we do here is, you add Jack or Jill to title to mom and dad's accounts, right, for ease of reporting, to not have probate, right? But now you have to monitor those bank accounts and make sure, and it could be, you're on the investment account and you're on the you're added to title on their everyday checking. Those two alone could add up to more than 50 grand.
Okay.
So automatic.
Hilda, I saw you come off mute. Did you want to add something on that one or?
No,
Okay.
really. Thank you.
Okay, thanks. Okay, next one. I think we should be able to get through all of these before one. It is anticipated that if the T3 is filed covering joint ownership of a house where a parent adds an adult child for the purpose of avoiding probate, then CRA will deem probate fees payable on the asset when the parent passes, if it is determined that the adult child is not the only beneficial owner. Does that?
Not a probate expert, but
Okay.
I don't know, the T3 requirement under probate is different, right? Probate is, if the child is already on title to the property, there's no probate because you already have a beneficial owner listed, right? My understanding. I'm not a lawyer. I don't know those rules off the top of my head. But there possibly is a T3 reporting requirement. CRA is not going to go and say, well, you didn't pay probate, because each province's probate rules are different. Tilda, I don't know if you want to add anything.
No, that is correct. I think probably from within the membership, from us colleagues, we're just sort of thinking out loud how these different reporting duties to different bodies, how will this impact if things are not streamlined? Like you say at the probate level, one thing, you say to CRA something else, then you file for a divorce and you say something else, you know. And I think that's sort of what is in the backdrop of all these questions, like, right?
It's
And
made it
rightfully
way-
so,
yeah,
rightfully so,
Yeah,
right?
it's made it way more complicated. I just know that probate requirements in BC are different, and from tax requirements, right? What's probatable and what you report for tax are not always the same thing.
But what may possibly have an impact is that component of beneficial, you know, interest, right?
Yeah.
And where it
So
says, well, was it really yours,
Yeah.
right? And
Yeah.
was it, you know, and if so, then doesn't that mean that, right?
Yeah, so under WESA, so, you know, somebody under the will could say they challenge the will. And you know, child A says, well, wait, I was at it, I'm at it on title, it's my property, right?
Exactly.
You didn't do probate, okay, fine. So now that the child who's contesting the will says, okay, prove it that it's yours. Mom and dad filed T3 returns, or you filed T3 returns to show that beneficial ownership is with mom and dad, right? So now that can be used in court to say, no. That shows beneficial ownership. That shows it was with mom and dad's and not yours, right?
Yeah.
No T3 returns were filed. Yes, it's mine, right? So it can swing both ways.
Yes, exactly.
Great, thank you. For interest-bearing accounts that have existed for less than 3 months before 2023 year end, is this exempted for T3
That
filing?
I'm not 100% sure on.
Okay.
I'd have to go look it up. I don't know if the exemption was there. But I'd have to look it up. I'll
Okay,
get
no
back to
problem.
you on that one.
Thank you. If a single person owning a home later gets married, is a T3 required once it becomes a matrimonial home?
It depends. Is that person wanting to gift, like they never put their new spouse on title for whatever reason, right? It just depends on what the intention is. So
Okay.
if their intention was, yes, we're living in the matrimonial home, but it's always mine, right? Because I had it with my previous partner and, you know, we're going to split it with my previous partner's kids or whatever, right? I don't know. It depends on the situation. There's no cut and dry answers.
Okay, thank you. Okay, Hilda, I have some specific questions for you. Actually, sorry, one question. What's the deadline for filing a T3? We'll just address that first.
April 31st, or sorry, this year is April 30th, 2024, which falls on a Saturday, I think. So it's April the 2nd this year. So I've got my dates wrong, sorry.
May
March 30th,
Oh.
it's 90 days after the year end.
Okay.
So this year being a leap year, it is March 30th. So March 30th, I believe, is a Sunday or Saturday. So it'll be April the 2nd, the Monday.
The Tuesday, because April 1st is a holiday.
Oh yeah, there we have a holiday. That's why I'm getting all confused.
Yeah.
I work
April
it all.
2nd? Okay. We'll say April 2nd. Yes. Okay.
April 2nd for this year,
Perfect.
but it's always 90 days after from December 31st.
Okay. Thank you. Okay, Hilda, if we can do a bear trust for property, could we do the bear trust agreement to cover joint bank accounts, such as a child on a joint owner on a parent's bank account?
It's a good question. I think from the notary's point of view, it makes sense that, you know, if you like, that we can do the bear trust agreement when it comes to real estate or the transaction we're doing, because we're right in that moment involved with it and we know it. Because we're not a banker, we're not the one basically doing the add-on to the bank accounts or the investment accounts. That is done at the bank or the or at the wealth financial advisors level. So I'm not sure whether that would be within my comfort level then to draft a document for something that I'm not a direct participant in. So that would be my take on that.
Thanks, Hilda. And the next one's for you also in regards to PTT, property transfer tax reports. Correct me if I'm wrong in these acronyms.
Yeah,
Okay.
yeah.
Okay. I've had mixed answers from PTT on this. Do we or should we be identifying trustees on a PTT report when they are only on title for financing purposes or for estate planning purposes? Property transfer tax has told me no, but when I look on the definition of a trustee, I believe it would apply. Your thoughts on this?
I would say that the answer here would be to use Sonia's favorite two words. It depends. It would be very different approach if it is trustees in the context of an estate than if it is a trustee in a different context. So I think you want to look at it case by case and then verify it with what the legislation says and how it is described. I don't think there is a one size fits all answer to that question.
Okay. So we're at 1 o'clock. There's a few more questions, and I apologize, notaries. There's a couple scenario ones here. So I will screenshot these and have these answered by either Ruben, Sonia, or Hilda, and I'll include those in the members area with this being recorded, Ruben's presentation and Sonia's presentation. So all that information will be there with links as to where you can click through to. Any final words from our presenters?
Just to go back on that notary's separate account. Yes, if it was in existence for less than 3 months, you don't have to file T3.
Thank you. Perfect. Hilda, Ruben, any final words before we wrap this up?
No, not really. Thank you.
The only thing, just a reminder, I think most people know how to reach out to us. We have a dedicated email for inquiries on detailed guidance. That's loader, LOTR, @ltsa.ca, and we're always happy to help you. Thank you.
Perfect. Thank you. So again, I'll get these last questions answered and everything should be uploaded in the members area by end of day. So thank you very much to our presenters. I know it's been some valuable content, and thanks notaries for spending your lunch hour with us. Have a good afternoon, everyone.
Thank you.
Thanks.
Thank you.
Bye.